All right, fam, let's dive into the stock market. What is a stock anyway? Time to break this down with some serious pizza vibes. Imagine a company is a giant, delicious pizza, like the kind that makes you say, OMG, that's fire. This whole pizza represents one company. A stock or a share is just one tiny slice of that pizza. When you buy a stock, you become a part owner of the company. You own a slice of the pie. It's like getting a piece of the action. No cap. When you own stock, you literally own part of that company. You're not just watching from the sidelines, you're in the game. The more slices you own, the bigger your piece of the company. Some people own just one slice, others might own multiple slices. It's all about how much of the company you want to own. So there you have it. A stock is literally just owning a piece of a company. It's that simple, that fire, and that's how you get your slice of the business world. So where did this crazy idea of stocks actually begin? Buckle up because we're about to time travel back to the 1600s when the internet was just people shouting really loudly. Picture this. Merchants in fancy hats wanted to fund these absolutely epic sea voyages to trade for spices. We're talking about the original influencers trying to get that exotic content from faraway lands. But here's the plot twist. These voyages were incredibly expensive, like buying a house expensive. Actually, more like buying several houses expensive. These merchants were basically broke after funding one trip. So these big brain merchants came up with an absolutely genius plan. It was like the original crowdfunding, but way cooler. They decided to sell shares of the ship's voyage to regular people. Think of it like this. Instead of one person paying for the entire expensive voyage, they split the cost among many people. You could literally buy a piece of the action. It was like buying a lottery ticket, but with boats. Here's how it worked. If the ship returned loaded with treasure and spices, everyone who bought a share got a piece of the profits. But if the ship sank or got attacked by pirates, well, your money went down with the ship. High risk, high reward, the original YOLO investment. And that, my friends, was the birth of the world's first stock company. These merchants basically invented the concept of sharing both risk and reward with regular people. Talk about a major stonks move that changed the world forever. This brilliant stock market idea didn't just stay in one place. It went absolutely viral across the globe. Like the best memes, good ideas spread fast. And here in India, our stock market origin story is absolutely legendary. Picture this. Mumbai in the 1850s. No fancy buildings or glass towers, just this iconic banyan tree. A few brokers would gather under this tree to trade shares, basically the original office space, but with way better vibes and natural air conditioning. This informal group kept growing and growing, like when your group chat starts with 3 friends and suddenly there are 50 people you don't even recognize. Eventually, this humble tree gathering had the ultimate glow-up and became the Bombay Stock Exchange, or BSE. Talk about a major transformation. And here's the flex. The BSE became Asia's oldest stock exchange, from humble beginnings under a tree to big boss status. That's what we call a legendary origin story. So next time you hear about the BSE, remember, it all started with some traders chilling under a banyan tree. Sometimes the best ideas come from the most unexpected places. All right, history lesson over. Time for some real talk. How does the stock market actually work today? The best way to understand it is through something every Indian knows, the good old sabzi mandi. Picture this, vendors with their fresh produce, customers hunting for the best deals, prices changing based on demand. It's pure chaos, but somehow it all works perfectly. This is what we call chaotic good energy. Now here's where it gets interesting. The stock market works exactly like this mandi, but instead of tomatoes and onions, people are trading company shares. Let me break this down for you with a side-by-side comparison that'll blow your mind. In the sabzi mandi, vendors sell vegetables to customers. In the stock market, companies sell shares to investors. The basic principle is exactly the same. Customers buy what they need for their kitchen. Investors buy shares of companies they believe in. Same energy, different products. When tomatoes are in high demand, prices go up. When everyone wants a company's shares, the stock price shoots up. Supply and demand, baby. Everyone's trying to get the best deal, whether it's the freshest vegetables at the lowest price or the most promising stocks before they moon. And here's the beautiful part. Both look absolutely chaotic from the outside, but they actually work incredibly efficiently. It's like organized chaos at its finest. So the next time someone asks you how the stock market works, just tell them it's like a giant sabzi mandi, where instead of arguing over tomato prices, people are arguing over company valuations. Big brain time. The beauty is in the simplicity. Whether you're buying onions or buying shares, the fundamental principle remains the same. It's all about finding value and making smart decisions in a bustling marketplace. All right, time to talk about the primary market, or as I like to call it, the farmer's fresh produce stall of the stock world. This is where the magic happens, where companies go from zero to hero, from private to public. Picture this. Our farmer has been growing the most amazing vegetables in his backyard. But now he wants to expand, maybe buy more land, get better equipment, hire more workers. Sound familiar? That's exactly what companies do when they need cash to grow. So what does our farmer do? He sets up a stall and puts up a sign saying fresh IPO stocks. Because in the stock market world, an IPO is like selling your fresh produce directly to the people for the very first time. IPO stands for Initial Public Offering, which is basically corporate speak for, hey everyone, want to buy a piece of my company? It's like the farmer saying, these tomatoes are fresh off the vine. Who wants some? Now here come the customers. That's us, the investors. We see this fresh produce, we like what we see, and we're ready to spend our hard-earned money. But here's the thing. We're buying directly from the farmer, not from some middleman. When we buy these fresh IPO stocks, our money goes straight to the company. Just like when we buy vegetables, the money goes straight to the farmer. The company uses this money to grow, expand, and hopefully become the next big thing. The beautiful thing about the primary market is that it's all about fresh starts and new opportunities. Companies get the capital they need. Investors get a chance to be part of something from the beginning. It's like being the first person to try a new recipe. Risky, but potentially very rewarding. So remember, when you hear about an IPO, think of our farmer stall. Fresh produce, fresh stocks, same energy, companies selling their shares for the first time, investors getting first dibs, and everyone hoping for that sweet, sweet growth. But plot twist. The next day, our farmer bro has left the building. The stall is closed, and he's probably at home counting his money like Scrooge McDuck. Now, here's where it gets spicy. The people who bought tomatoes yesterday are still here, and they're like, yo, I got tomatoes, you got cash, let's make a deal. It's basically peer-to-peer trading, no farmer required. This, my friends, is the secondary market. It's like a giant group chat where everyone's trading stuff they already own. No new tomatoes are being created, just existing ones changing hands. Now, in the real world, we can't just trade stocks in random WhatsApp groups. We need proper organized mandis. Enter the BSE and NSE, the OG stock exchanges of India. They're like the official trading arenas. The secondary market is basically a never-ending game of deal or no deal. Every second, people are making decisions. Should I buy this stock? Should I sell? What's in the briefcase? Except instead of Amitabh Bachchan, you have algorithms and day traders going crazy. And that's the secondary market for you. It's where the real action happens, where fortunes are made and lost, and where everyone thinks they're the next Warren Buffett until the market humbles them. Welcome to the jungle. What actually makes stock prices go up and down? It's the age-old economic principle that controls everything from your favorite memes to stock prices, supply and demand. Think of it like a giant balance scale. On one side, you have demand. How many people want to buy? On the other side, you have supply. How many people want to sell? When a company announces amazing profits, everyone gets FOMO, fear of missing out. Suddenly, everyone wants to buy, demand shoots up, and prices go to the moon. But when bad news hits, everyone panics and wants to sell immediately. Supply floods the market, and prices crash faster than your Wi-Fi during an important video call. It's exactly like mangoes in summer. When mangoes are in season and everyone's selling them, prices drop. But if there's a shortage and everyone wants mangoes for their Instagram posts, prices skyrocket. So remember, high demand plus low supply equals moon prices. High supply plus low demand equals discount sale. It's the fundamental force that drives every price movement in the stock market. Back in the day, if you wanted to buy stocks, you literally had to find a broker sitting under a banyan tree. No cap. That was actually how it worked. But today, bro, you don't even need to leave your house. These apps on your phone are basically your modern day brokers, and they're way more efficient than any tree sitting uncle. These apps connect you directly to the main markets, the BSE and NSE. It's like having a direct hotline to the stock exchanges, but instead of calling, you're just tapping your screen like you're ordering food. Your phone connects to BSE and NSE through these apps. It's like having superpowers, but for capitalism. You can literally buy slices of your favorite companies with just a few taps. Want some Tata? Tap, tap. Feeling bullish on Reliance? Tap, tap. It's easier than liking memes on Instagram. Investing from your couch while wearing pajamas? That's the glow up we all needed. From walking to a tree to tapping on your phone, technology really said, "Hold my chai," and revolutionized everything. So yeah, that's your role in the modern market. You're literally one app download away from becoming a stock market participant. No trees required, just Wi-Fi and the audacity to believe in stonks. All right, fam, let's clear this up once and for all. The stock market is not a casino, and I cannot stress this enough. This is literally the most important thing to understand. The stock market is actually a big brain system that helps companies raise money to grow and innovate. When companies succeed, they create jobs, develop new technologies, and boost the entire economy. It's like the ultimate glow up for everyone involved. And here's the plot twist. You and I can actually participate in these success stories. When companies do well, their stock prices go up, and everyone who invested gets to share in that success. It's like being part of the main character's journey, not just watching from the sidelines. Think about this journey we've been on, from risky sea voyages where merchants pooled money for ships, to that legendary banyan tree in Mumbai where traders gathered, to now having the entire stock market literally in your pocket on your phone. That's some serious character development right there. At the end of the day, the stock market is the ultimate win-win situation. Companies get the money they need to grow and create amazing products and services. Investors get to share in that success. The economy gets stronger, jobs are created, innovation happens. It's literally a positive-sum game where everyone can level up together. Hope that cleared things up. The stock market is a powerful system when you understand the basics. If this video helped you, smash that like button and subscribe for more simple videos on money and investing. I have a question for you. What's the first Indian company you can think of? Let me know in the comments below. See you in the next video. Don't forget to like and subscribe for more stonks knowledge. Yo, what's the tea on the market right now? Let me spill the deets on today's market vibes. As of May 29th, 2025, the Indian stock market's opened positively and honestly. It's giving major stonks energy right now. The Nifty 50 is vibing at around 24,868 points, up by 0.47%. That's some solid green energy right there. Meanwhile, the BSE Sensex is absolutely crushing it at 81,753 points, up by 0.59%. The markets really said we're choosing violence today, but in a good way. The whole vibe is just immaculate right now. Global cues are looking fresh, and investor sentiment is absolutely sending positive energy into the universe. It's like the market literally woke up this morning and chose good vibes only mode. Investors are feeling bullish, and honestly, we're here for this energy. So yeah, that's the current tea on the markets. The vibes are immaculate, and the numbers are looking spicy. All right, let's talk about which sectors are absolutely popping off right now in the Indian stock market. We're talking about the real MVPs here. First up, we have financials taking the crown. Banks and financial institutions are leading the charge with some serious gains. They're basically the main character energy of the market right now. Coming in strong at second place, we have pharmaceuticals. The pharma sector is showing some major stonks energy with solid gains. Healthcare stocks are definitely having their moment. And don't sleep on real estate. Property stocks are making some serious moves too. They might not be at the top, but they're definitely showing up and showing out with steady gains. So if you're looking for some big brain investment opportunities, these are the sectors to watch. Financials and pharma are the clear winners right now. but real estate is also worth keeping on your radar. All right, fam, time for the real tea on what's happening with the rupee and oil prices. These might seem boring, but trust me, they're low-key important for the stock market vibes. First up, the Indian rupee versus the US dollar situation. Our rupee opened at 83.35 against the dollar, which means it's slightly weaker than before. Not great, not terrible, but definitely something to keep an eye on. Now for the oil situation, Brent crude is chilling at around $84 per barrel. It's stable, which is honestly giving us major "this is fine" energy. No drama here, just steady vibes. But here's why you should actually care about this stuff. When the rupee gets weaker, it can make imports more expensive, which affects companies that rely on foreign materials. And oil prices? They literally impact everything from transportation costs to manufacturing. So when you're checking your portfolio and wondering why some stocks are moving weird, remember to stay woke about these macro factors. The rupee and oil might not be as exciting as meme stocks, but they're pulling strings behind the scenes. All right, fam, time to talk about market volatility. Think of it like a roller coaster. One minute you're up, next minute you're screaming, "Why did I get on this thing?" Experts are warning us about some short-term volatility coming up. Why? Two main culprits: international drama and corporate earnings reports. It's like when your favorite streamer drops unexpected news. Chaos ensues. Now watch this cart go wild. This is basically your portfolio when volatility hits. One day you're feeling like a genius investor, next day you're questioning all your life choices. But here's the real talk. Don't let FOMO make you do something stupid. You know that feeling when everyone's posting their gains and you're like, "I need to get in now." That's FOMO talking, and FOMO is not your friend in volatile markets. Instead, channel your inner diamond hands energy. Stay calm, stick to your plan, and remember, volatility is temporary, but panic selling is forever. So when the market starts doing its crazy dance, remember, this too shall pass. Buckle up, keep your hands diamond strong, and maybe grab some popcorn because volatility can be quite the show. Meet the RBI, the Reserve Bank of India. They're basically the adult in the room when it comes to India's financial system. While everyone else is going crazy with stonks and crypto, RBI is sitting there like, "This is fine," keeping everything stable. Their balance sheet absolutely went brrr in FY25, growing 8.2% to reach 76.25 lakh crore rupees. That's some serious big number energy right there. Basically, RBI's financial muscles got swole. And then there's the e-rupee, RBI's answer to all the crypto bras. The digital rupee circulation hit 1,016 crore by March 2025. It's like RBI said, "Fine, we'll make our own digital currency with blackjack and government backing." So yeah, RBI is basically that friend who stays sober at the party to make sure everyone gets home safe. While the stock market is having its main character moments, RBI is quietly in the background making sure the whole financial system doesn't turn into a complete meme. The IPO market in India is absolutely on fire right now. We're talking serious hype-beast energy in the investment world. India just secured a massive 22% share of global IPO activity in the first quarter of 2025. That's like being the main character in the global finance anime. We're talking about $2.8 billion raised from 62 IPOs. That's some serious bag-securing energy right there. 62 companies decided to join the party and go public. New players are entering the game, and investors are absolutely here for it. This is peak hype beast behavior from the Indian market. Companies are dropping IPOs like they're limited edition drops, and everyone wants in on the action. The IPO market is basically the stock market's way of saying no cap, we're still crushing it. And honestly, the numbers don't lie. Market capitalization is basically how you categorize stocks by their total value. Think of it like choosing your aesthetic. You gotta know what vibe fits your investment style. There are three main types of market cap categories, and each one has its own personality. Let me introduce you to the squad. Large cap stocks are like that friend who always has their life together. These are established companies worth over 20,000 crores, giving you stable returns without the drama. Think TCS, Reliance, the original gangsters of the stock market. Mid-cap stocks are your balanced bestie. They're growing companies worth between 5,000 to 20,000 crores. They offer growth potential with moderate risk, making them the sweet spot for many investors who want some excitement but not total chaos. Small cap stocks are the to the moon squad, emerging companies worth under 5,000 crores. They have high growth potential but also high volatility. It's pure risk it for the biscuit energy. They can either make you rich or give you trust issues. So here's your choose your fighter moment. Large caps are low risk with steady rewards, perfect if you want to sleep peacefully. Mid caps offer balanced risk and reward. Small caps are high risk but potentially high reward, basically the YOLO option of investing. The key is knowing your vibe and risk tolerance. Are you a slow and steady wins the race person, or more of a diamond hands to the moon type? Your market cap choice should match your energy and financial goals. All right, gamers, before you can start your stock market journey, you need to get your setup ready. Just like you can't play online without creating an account, you can't invest in stocks without the proper accounts. You need 2 accounts to get started. Think of it like this. The DMAT account is your digital locker where your stocks are stored safely, and the trading account is your portal to actually buy and sell those stocks. Now comes the fun part, choosing your broker. It's like a character selection screen in a fighting game. You've got traditional brokers with full service but higher fees, discount brokers with low fees but you do everything yourself, or robo-advisors that use AI to help you invest. The account opening process is pretty straightforward these days. Most brokers have made it super easy. You can do everything online. Just fill out the application, upload your documents, complete your KYC verification, and boom, you're ready to trade. And just like that, achievement unlocked. You now have access to the stock market. Your accounts are your gateway to building wealth through investing. Remember, this is just the beginning of your financial journey. Pro tip from the community. If you're just starting out, consider going with a discount broker. Lower fees mean more money stays in your pocket for actual investing. This is the way. India's economic growth is absolutely crushing it right now. We're talking about that friend who just keeps leveling up in every game they play. The OECD has dropped some serious numbers. They're forecasting India's GDP to grow by approximately 6.8% in the 2024-2025 fiscal year. That's like getting a legendary drop in your favorite RPG. But wait, there's more. This isn't just a one-time flex. The projections show this growth rate is expected to be sustained all the way into 2027. It's like India activated some kind of economic cheat code. This trajectory puts India among the fastest-growing major economies in the world. For investors, this is basically the economic equivalent of finding out your favorite stock just announced a major partnership with Tesla and Apple at the same time. What does this mean for the stock market? Well, when an economy is consistently growing at this pace, it creates a rising tide that lifts all boats. Companies have more opportunities, consumers have more spending power, and investors get more reasons to be bullish about Indian markets. The Indian stock market isn't just for the big players anymore. Retail investors, that's regular people like you and me, are joining the party in massive numbers, and it's becoming a true community movement. More and more people are discovering that investing in stocks isn't rocket science. The retail participation has exploded, and everyone's getting their piece of the stonks action. What's driving this retail revolution? 3 main things. Small and mid-cap stocks have been performing like absolute units, people are finally understanding mutual funds, and digital trading apps have made investing as easy as ordering food online. Small and mid-cap stocks have been absolutely crushing it, giving retail investors those sweet, sweet gains. When people see their friends making money from these smaller companies, FOMO kicks in, and everyone wants a piece of the action. What started as individual investing has become a massive community movement. People are sharing strategies, celebrating wins together, and supporting each other through the ups and downs. It's not just about making money anymore. It's about being part of something bigger. The IPO market is getting a major glow up, and it's not just about who can throw the most money around anymore. We're talking about trends that would make even the most chronically online investor say, that's actually based. First up, ESG investing is absolutely sending right now. Environmental, social, and governance factors aren't just buzzwords anymore. They're the main character energy that investors are looking for. Think of it like this. ESG investing is the ultimate why not both moment. You get to be environmentally conscious and make bank. It's like being the main character in your own financial glow-up story. Technology and fintech IPOs are still absolutely slaying the game. We're talking AI companies, digital banking platforms, and anything that screams, I'm from the future, and I'm here to disrupt everything. The pattern is pretty clear. If your company is doing something digital, sustainable, or ideally both, you're probably going to have investors sliding into your DMs asking about your IPO plans. So there you have it, the IPO trends that are absolutely sending right now. It's not just about having a good business model anymore. You need to be sustainable, tech-forward, and socially conscious. Basically, you need to be the complete package that would make even the most skeptical millennial investor say, okay, that's actually fire. Time to break down the meta sectors of the Indian stock market. These are the OP sectors that are absolutely crushing it right now. Think of this as your tier list for where the smart money is flowing. First up are S-tier sectors. These are absolutely broken right now, and everyone's talking about them. IT and digital services is still the main character of Indian markets. With the AI boom happening globally, these companies are literally printing money. It's giving major stonks energy. Green energy and EVs are having their moment. Climate change isn't just a meme anymore. It's serious business. India's going full Tesla vibes with electric vehicles and renewable energy. Moving to A-tier. These sectors are solid picks that won't disappoint. They're like the reliable friend who always comes through. Pharma and healthcare had their glow up during COVID, and they're not slowing down. Health is literally wealth now, and investors know it. Infrastructure is literally building the future in real life. Roads, bridges, airports, all the stuff that makes modern life possible. It's not flashy, but it's essential. Fintech is making money moves literally. The UPI revolution that started in India is still going strong, and digital payments are becoming the norm everywhere. B-tier sectors are the steady performers. They might not be trending on social media, but they're quietly making money. Consumer goods is giving recession-proof vibes. People gotta eat, drink, and buy stuff no matter what's happening in the economy. Defense sector is getting that Make in India energy. National security is always a priority, and the government is serious about building domestic defense capabilities. So there you have it. Choose your fighter wisely. These sectors are the current meta, but remember, past performance doesn't guarantee future results. Always do your own research before making any investment decisions. The market can be unpredictable, but these sectors are where the smart money is watching right now. Welcome to the age of algorithmic trading, where bots have basically become the main characters of the stock market. Think of it as the ultimate cheat code for trading. Algorithmic trading is basically when computer programs, or bots, automatically execute trades based on pre-programmed instructions. It's like having an army of super-fast robots doing your trading while you're busy watching memes. Meanwhile, human traders are like that one friend still using Internet Explorer while everyone else has moved to Chrome. They're trying their best, but the bots are just operating on a completely different level. Think of algorithmic trading like having auto-aim in a first-person shooter game. While manual traders are still trying to line up their shots, the bots have already locked onto the target and executed the perfect trade. Here's the tea. Algorithmic trading now accounts for over 60% of daily market transactions in India. That means more than half of all trades are being executed by bots, not humans. It's like that meme where everything is on fire, but we're all just saying, this is fine. But here's why algorithmic trading is actually overpowered in a good way. These bots execute trades in milliseconds, making the market more liquid by ensuring there are always buyers and sellers available. Plus, they work 24/7 without needing coffee breaks or bathroom breaks. It's like having the ultimate productivity hack for the entire stock market. So while it might seem scary that bots are taking over, they're actually making the market more efficient and accessible for everyone. It's like having a really good teammate in an online game who carries the whole squad to victory. The future of trading is here, and it's automated.